welcome to a very, very special program in which three of what I think are the finest minds look ahead at where India is heading and where we're at right now. During this program, we will be making hard forecasts on growth, prices, the stock market. Will there be another crash coming, which the governor of the RBI recently alluded to and pointed out that it's a major concern. So what's the forecast for India? Boom or crash? Now, if you want to know where to invest your savings, keep it safe, go for a big upside, keep tuned into these three wonderful gentlemen. And they're not just talking in theory. I was going to say they're not just pretty faces. Each one has created exceptional enterprises. In fact, the market cap of what they created will be over $125 billion. That's the three of them combined. About the budget, the government of India would love to have some of that. Just have you don't really need to introduce them. Deepak Parekh created the most fantastic brand and the most fantastic organization, HDFC, $60 billion. Amazing. Sunil Mittal, who I've always said what you have done has added 2% to India's growth rate. Because if we were still using phones, we would be 2% in our growth rate, not GDP. That's more important. How you've transformed communication, decision making is just something we should all be thankful for. And Anil Agarwal, $35 billion organization, and now putting a lot of it back into doing things for society. In fact, this here is in many ways, frankly, the new India story of real business. And if you add to them the exploding virtual world of Snapdeal, Flipkart, Quicker, OLX, you have the two most exciting growth stories for the future of India. Real, bricks and mortar, telecom, banking, and virtual, which is the up-and-coming new area. In addition to forecasting the Indian economy during the next 1 hour, we will ask each one of these successful business leaders this one question. If the Prime Minister was to call you and ask each of you to recommend 3 things that need to be done for India, what would those 3 recommendations, policy recommendations be? We'll ask the 3 recommendations to the PM during the course of the show. But let's start with the first one. Deepak Parekh, the first recommendation. You're sitting in front of the Prime Minister and he said, give me what's one recommendation out of the 3?
Prannoy, I would say that allocation of resources, both natural resources and other resources, which are always in short supply, should be given in an absolutely transparent manner. We have got into this mess because of favoritism, because of vested interests, because we have not followed the rule.
Right.
We have given entry, backdoor entry to people, whether it's... And resources, I mean spectrum, I mean land, I mean coal, gas, iron ore, any mineral resources.
Where the
underground
country owns and has to farm it out,
you have to auction it. You have to auction it transparently. You have to auction it on the net, and people can bid, and everyone knows that there is no unfair treatment for anyone.
I think that's hugely, because
all our pending cases on this Coal India, the controversy that the Supreme Court has now brought up about cancelling allocations, God knows how
maybe
many
quite rightly actually.
But
because it was non-transparent. How do you cancel?
It's very difficult.
But it happened in telecom, right? It was done by e-auction, and it was hugely successful. There was never, in that area, there was never any doubt about the process. And it was, of course, everybody had to pay a high price, but in the end, you pay the price and you move on. No one questions you. Do you agree that it's in a major area?
Yeah, I would say, distribution of natural resources for commercial exploitation. I mean, I think that's what we're talking about.
Yes, exactly.
There will be very large areas of distribution of resources for land for schools, facilities for hospitals, other public good. That will need to be perhaps dealt with in a very different way.
Yes.
And I think that's where the challenge lies. But to your point, what should the Prime Minister do?
Yes, your first recommendation would be what?
Yeah, first of all, I think, in my opinion, the biggest thing a leadership can deliver to a nation is hope. For me, there is nothing more powerful than creating a hope in a nation. I have to say on that account, the Prime Minister has done a wonderful job. And my, therefore, urging to him would be keep the hope intact, because that's very important. That's a starting point.
Now, how do you, he'll say, okay, how do I generate hope?
First of all, he's done it in a remarkable way.
Not him, just say any Prime Minister asks you, how would I generate hope?
Yeah, you create a conducive environment, and in hope you start making decisions which are favorable towards investment.
Right.
Foreigners start coming back in. You see the stock market's an all-time high. First quarter has seen $20 billion flowing in foreign investments, both FII and FDI. That is what you call the starting point of any rebuilding or revival of a national economy.
There must be a positive spirit in the country. Anil Agarwal, I think you were also mentioning earlier about allocation by e-auctions. E-auctions is a transparent manner. In your area, though, you have specialized globally in natural resources. What would your first recommendation to the Prime Minister, or any Prime Minister be, a leader of this country?
See, above the earth, below the ground, is the most important how I look at.
Right.
Above the earth is agriculture, below the ground, oil and gas, gold, copper, coal, any resources. In all over the world, how the development has taken place, whether you take North America, whether you take Australia, Central America, Middle East, they all have grown. One is above the ground, which is agriculture, doesn't go enough in the coffer of the government. Below the ground, how the 50% of the revenue, by and large, go to the government.
Worldwide.
Worldwide.
Right.
Worldwide.
So that's a huge source of revenue.
See what Mr. Obama, for 10 years back, they're invading anywhere in the world for the oil and gas. Today, because of his simple policy of shale, the country is going to be self-sufficient.
So they don't need just one trigger to get shale, oil and gas transforms their need.
Today we have 90% of our import of oil and gas, 100% import of our gold, 100% import of our copper, any resource. Our mindset is that we have to import. We have a rich mineral resource country. We are Sone ki chidiya.
Really?
That's how we've been called.
We have it.
We have it.
But we are not using it.
Yeah, the important thing is that we have to, like if you see the China, they get $100 billion, $120 billion every year. The money is coming in. You name the one company.
So just tell me, let's say oil and gas. How would you make us less dependent on importing oil and gas? How would you do that in practice?
And any country does not produce 50% of their energy requirement. We cannot eradicate their poverty. We have to have 20 large companies working in oil and gas.
20. So you're not just saying one or two large companies.
No.
You want to open it up to 20, 30 number of companies exploiting oil and gas.
Minimum 20 companies has to come. You have to create a conducive environment. You have to give them facilities. You know, we need expertise. Indian entrepreneur, Indian company does not have expertise. We have to give them a conducive, they have enough place to go.
So let me just ask you, say gold. Do you think if we allowed lots of, just again, e-auction gold mines, we could get much more gold out of our ground?
Absolutely. The Kolar field, the exploration which is required, you know, we used to produce phenomenal gold. You know, every coal mine has been, the gold mine has been shut down. Even the Supreme Court has given a ruling saying that auction our gold mine.
And let's get our own gold rather than import it.
Absolutely. Our
Do you agree with that, Deepak Parekh, that we are just not, we are an import mentality. We feel we have to import 90% of our oil when we just don't exploit what we've got.
Absolutely. I think why is it that not a single E&P company, a large E&P overseas, the big boys in the oil industry, why have they not come to India up to now? Because of uncertainty of our policy, because of change of regulations, frequent change of regulation in between. There is no energy policy of 10 years. This is a long-term game. This is a capital intensive, high technology. We do not have capital. We do not have technology. We need these people.
Learn from China on this, yes.
Learn from China.
So the message I'm getting is, they'll come first if they have hope that India is serious. Secondly, they'll come to help us exploit our natural resources, and we've got lots of it unexploited all these years. And thirdly, it has to be done in a transparent manner through e-auctions. That combination could transform Indian...
You know, 40% of our import bill in the last 2 years has been one item, which is crude oil. 40%, which is growing rapidly. And we should be thankful that despite this, the political issues that are going on in the Middle East, oil prices are all-time low.
Right.
For the last 15 months, we have the lowest oil price today.
Right.
It's a great boon to India. Otherwise, this
But we should not be so dependent on global oil prices. We should have our own.
Absolutely. This is the most, we have an import bill of almost $500 billion. This is absolutely not acceptable.
Okay, so I think that is a very good first. If I was any Prime Minister, I would be I think that's a serious way to act. Build up hope, positive attitude, look at your own resources and e-auction them, and let there be 20, 30 companies, not just 2 companies, 3 companies. You're one of the 2, 3, so you don't mind more competition.
Unless you create the market, how you can survive?
Let's just move on and just go a little bit above the ground, as you say. We were talking about below the ground, and see what's happening in the last 4 or 5 years has been a bit of a problem. If we look at India's investment growth, that has begun to stall. What has happened is the sharp growth that we had between 2000 and 2007 has now dropped off. And that is something to really worry about. It went up from about 20%, 25% to nearly over 35%, and now it's drifting down back to around 27, 20, 30, 32%. And there's been a major problem, the slowdown of new investment projects. If we just have a look at the data on what's happened to new investment projects. If you look at the period between 2003 and 2009, 2006 and 2009, 40% of our GDP was new investment announcements. What's happened in the last 3 years? It's down to 15%. Now that is a terrible decline. It's a major decline in new investment projects. And it's not only in industry. Just look at what's happening in agriculture, where eventually our future is going to lie. 2002 to 2006 was the general trend. In those 4 years, we added 9 million hectares of new irrigation. Irrigation is the future, a source of growth in agriculture. Look what's happened in the last 4 years, of 2007 till 2011, for which we have data. 1 million. From 9 million in 4 years, only 1 million new irrigation project, 1 million hectares. It's a shocking slowdown. And to look at it in another way, India still has a great growth story in manufacturing. Just look at where our manufacturing is compared to the rest of the world. In China, 33% of its GDP is manufacturing. Thailand, 30%. Malaysia, 24%. Philippines, 21%. And India, 13% of our GDP is manufacturing. So, Sunil Mittal, there are 2 ways to look at that. One is 13% is terrible, but also that means we have potential. We could go to 30%, 25% at least. There's potential for growth in manufacturing.
You know, we should actually look at where we were just a few years back.
Right.
We were at 17% of GDP, and the target was to quickly claw back to 20% and above. and the much talked about national manufacturing policy was put into place. I thought the number was more like 14.5. I'm not sure if 13 is correct, but assume
Yeah,
whether
this
it's
is
14,
2011 and maybe 14,
yeah, so
but still way below.
So instead of going towards the direction of 20% part of the GDP, we've actually come down.
14.
And the reason for that is, actually no surprise, if you would have talked to many of my peers in the last 2 or 3 years, nobody was talking about investment in capacity. Everybody was talking about conservation of capital. And that would have led to this situation. I'm not surprised at all. In fact, when I used to debate with some of my friends or people in the government, they said things are moving. I said they are moving because we had put our foot on the pedal in 2005, 6 and 7. And the momentum that we are seeing is because of that, but the foot has come off.
And you're going to feel the effects 3 years
later. That's what is happening now.
Exactly.
So to my mind, manufacturing is one of the most important area to concentrate. It'll create jobs. Of course, it'll create a lot of ancillary momentum around it. And for export purposes, in any case, we need to manufacture more.
Hugely. Yeah.
The good news is the previous government, in the last couple of years of their term, were talking a lot about it, but you didn't see much coming through. Right. This government is very heavily committed towards manufacturing revival. Yes. In fact, the Prime Minister's clarion call in Japan was largely towards manufacturing. Come and make in India, as he says. Yeah. And my own view is that you will see some turnaround because investments will come, both to Indian and overseas investment. And we should see a lot of more manufacturing. One area where I must point out, while Anil has mentioned about oil imports at $500 billion, electronic imports are not too far behind.
True.
In fact, the projection is in 2020, electronic manufacturing of all kinds, including telecommunications, would be the largest import bill
overtake oil
in this country.
Now that we should be manufacturing. This is an area. So Deepak, how do we get manufacturing going from 13%, let's go at least 25% of our GDP should be manufacturing?
See, take 2 or 3 sectors, Prannoy. Take, Sunil is talking about hardware, chip manufacture, semiconductor. This year we imported $100 billion of electronics, mainly chips, microchips.
Crazy.
This is going to be 400 billion in 2020. If we are world leaders in software, why are we not in hardware?
Right. Exactly.
Why is Intel, ADM, Samsung, why have they not come here with hardware? Why can't Indian companies set up hardware? It is an expensive project. It requires government help, government support, concessional land, concessional power, easy access for foreign technology. And this is very heavily capital intensive, but and that is manufacturing.
When you say concession, these should be clearly spelled out and just, these are the rules, stick by them.
5 years ago,
no hazy,
5 years ago, Intel came here, were very serious of putting up a chip manufacturing, a $10 billion project, which would give massive amount of jobs in Chennai. Government could not give them any concessions. Taiwan invited them, Malaysia invited them, China invited them. Vietnam, and they went to Vietnam.
So Anil Agarwal, I mean, we've seen this in other countries. We don't have to reinvent the wheel. We see the concessions others give. We have to match them and be transparent about them. So in this area, say manufacturing as well, would you say have hundreds of companies come in, even into every sector? Let things open up. Is that what you're suggesting? Globally, not only Indian, globally?
You have to simplify the process. The Prime Minister has said that 1 million people has to be entrepreneur. They have to set up their own industry. They have to create. What we need to eradicate our poverty. We need to create job. And what you say, manufacturing is going to support that. And manufacturing need a simple policy, a transparent policy, which people, state government and central government coordination.
And it's worked in other countries. We just have to copy. Or if you don't like the word copy, first copy, then improve, or be inspired by other countries. Everybody's got rules. We can have those rules.
Yeah, and if you look at, we are the most democratic country. It should be better here than anywhere else, because the rules prevail here.
If I can just add manufacturing, let's take defense. We are one of the largest importers of defense. Total import of defense. We are the largest. 15% of global manufacturing of defense
comes to India.
Comes to 15%. The second is 5%.
So we're doing a big service to the rest of the global economy.
Now the total FDI we've received in the last 12 years in defense is $4 million, $4.4 million. This is government numbers, not my number. $4 million in defense. Million. Now, here, the defense policy that government has come out recently, they have denotified number of products in it. But what China did, they allowed 100% in defense. But they said in 5 years you must come down to 40.
But they allowed 100%.
To start with.
Yes.
Because that attracted the capital, they got technology, they got their know-how, and then they were all, the work was done by Chinese engineers. They are not going to transfer millions of people from there. Now we have got 49. There is no difference from 26 to 49. There's not 1 ounce of better
Voting rights, nothing.
Voting, nothing. 26 and 49 is exactly the same. I do not expect we get money in defense. Now this is the Indian manufacturing lobby. This is the Indian manufacturing lobby.
That is also part of the...
Because we heard in the early days that the government was looking at 74% for defense. But the Indian manufacturing lobby prevented that to happen.
Right. I must say, I had one year stint in the government of India in the early days, and industrialists used to come and I say, you should open up your sector. They said, no, we're all for opening up, but my sector is a little special. This sector has got special aspects. I'm sure defense people say, defense is a little special, don't open this, otherwise open up everything. But you're right, it's the Indian industrialist who's as much to blame in not opening up as the government.
I hope you were not a part of it.
I supported 100%. In fact, right from the CI time of the president,
come down in
I personally believe that if a Raytheon or Rolls-Royce comes and sets up factories here,
whatever.
we are not a small country to be worried about what they'll do here. We will rather have them manufacture here under our wings. I mean, I'm of 100%.
Employ our people.
One more area which is an issue, but is the growth in GDP. And they say if you ask 5 economists what the GDP growth is going to be, you'll get 10 different opinions, but not with these. We asked 5 of the brightest economists what their forecast is for GDP, and this is what they said.
My forecast for GDP growth for FY15 is 5.5%, and for FY16 it's 6.5% plus.
So I'm quite optimistic that we may end up the year, this particular fiscal, anywhere between 5.7 to 6%. That's my take. You know, very optimistic would be 6, but I won't go below 5.7. Things are going to improve. FY16 is likely to be even better than this year, because this year we didn't have a good rainfall. So hopefully if we have a normal rainfall next year, agriculture will improve, rural incomes will improve, and that will boost the demand in the system. And given the business climate that is improving, hopefully in the months to come, FY16 I would pitch for anywhere between 6.5 to 7%.
So we see growth accelerating this year, this fiscal year, to about 5.5%, which actually will be quite creditable, because you've got kind of concerns about a drought, so agriculture growth will be quite weak. The government's on a fiscal consolidation path as well. So accounting for those factors, if we do get to 5.5%, what that will suggest is the underlying growth momentum of industry and services will be closer to 6%. Next year, I think FY16, we expect growth to accelerate further to about 6.5% or so, because I think then the policy actions of the government really begin to come into play and will boost growth.
Current fiscal year, and we are already in the middle of that, the expectation for GDP growth is about 5.9 to 6.2%, so thereabouts. And for next year, FY16, GDP growth will be higher, perhaps 6.5% to 7%.
Our projections are like 5.7% in this particular financial year, which should eventually be moving up to 6.4 in the next financial year. And we think there can be potential for further upside surprises to this particular number.
So Anil Agarwal, we are talking about 6% this year, maybe 7% next year. These are not really high figures. We know that all the BRIC countries have slowed down, but you see the slowdown in China from a 12% average to a 9% GDP average. We've slipped from 9% to 6%. We need to get up to 9%. These are better than the last 2 years, but still not satisfying, is it? 7%.
Absolutely. We have a tremendous potential to grow 1.2 billion people. No, 1/5 population of the world live here. Democratic country, it has all the potential. We have to gear up. Even if you, as you talk about the agriculture, and if you look at the agriculture has gone down. If GDP growth has gone down.
Look at the irrigation. We're 1 million compared to 9 million. It's just almost a tenth. I just wanted to go to something which all of you mentioned, and that is get foreign funds coming in through HOPE, through e-auctions, through giving them clear rules. Just look at the difference between foreign direct investment in China and foreign direct investment in India. And we're talking about last 3 years. China gets an average of $255 billion of foreign direct investment into China. India, 30 billion. That's 1/10. Deepak Parekh, 1/10. Now, rule of thumb, people say it's $50 to $60 billion of foreign direct investment gives you 1% extra on your growth rate. So you're talking about 255 billion, you're talking about 4 to 5% added to your growth rate because it goes into your economy. Here we got 30, so foreign direct is not improving our growth rate at all. How do we get to 250 billion?
We have to simplify our processes.
China is much more simple?
Much more. It's almost automatic and it's quick. You see, we have to reduce the red tape, we should have clear policies, we must go out and encourage foreign investment. Because of the lack of clarity, in India nothing is black and white, everything is grey. And so those who have brought money like Vodafone or Etisalat, they are big companies, they are global companies and they are stuck with billions of dollars invested. Telenor.
And the message that sends.
The message that sends is terrible. And so we have to rectify our policies and make it open, transparent, simple. One window clearance.
We could do that. Sunil Mittal, we could actually simplify and get, okay, not 250, but even 100 billion, 150 billion, it transform our growth rate.
No, absolutely. I think a lot has been said both by Anil and Deepak here. Potential exists. There's a large population, consuming population. Everybody gets it. There's nobody in the world, no board that meets around the globe doesn't see India as a great market. The issue is on ease of doing business.
That's it. And yes, you meet all of them all the time. That's
and on that, our ranking is actually rather shocking. I mean, so if you can fix ease of doing business, which lies in the governance of doing business, in government policy making, its execution, I think that's what needs to be done. To my mind, I mean, we were in Japan, they've got about $4.5, $5 trillion sitting on the side, earns nothing, negative interest rates. For them to move, and they want to have a second alternate base outside China in an urgent way.
Yes.
50, 60, $80 billion moving into India, 100 billion is absolutely no problem.
$4.5 trillion is
so
doable.
Combined with hope, we need decision making and execution of those decisions across the country, whether a central approval is required or a state approval is required. We need to make India an easy place to do business, and that's not a demand of the global world, it's also of the domestic sector. You know.
For ordinary people, it's so frustrating that we have this potential. It's like my golf. Great potential, never make my full potential. No. That's this country. We've got the potential and we just simple decision making.
See, you have to decide where the money comes. 100 billion is come, but if you look at entire India, we don't have more than 3 or 4 projects. The infrastructure, the amount of money can go in infrastructure.
Just
anything and
make
everything.
It clear and easy to come into India.
And clear policy, how it should be done.
I mean, if China, which is meant to be a socialist country, can do 255 billion, we can do at 150 without sacrificing certain of our principles.
One concern is extension of bank credit to industry. Right. This year, August to August, August 13 to 14, we've had the lowest expansion of bank credit. 10.9%. Last year was 16, the one before it was 13. This August to August, only 10.9. What does that indicate? Banks are not lending money, people don't have projects, pipeline of projects is not there, whether it's domestic or foreign. Bank credit, deposits have grown much faster. Deposits have grown much faster than the bank credit.
That is a leading indicator of problems to come.
So
the first thing that you see if there's trouble is bank credit
expansion.
One area which a lot of people are talking about as a little bit of a worry, and that is prices. If we have a look at what the current situation in a historical perspective for India is, it is worrying. But there are also, again, certain governance issues which make it clear that it's not just, it's not insurmountable. We can crack the prices problem. India's inflation rate, if you compare it with all emerging markets, say about 150 emerging markets, for 27 years, say from 1980 to 2007, India was the 60th worst out of, say, 150. But in the last 5 years, we are the 123rd worst. Our rank is terrible in terms of inflation. Our inflation is so high that we are near the worst countries. And that is a structural change which one has to worry about. But if you look at where is this inflation and why is it and what's happening, why should, for example, what about food prices? Have a look at food prices. That's the core of our problem right now. 2006 to 2009, food prices were already high. They used to grow at 3–4% a year. They went up to 7.8. But now, in the last 3 years, they're up to 12% food prices. And a real anomaly, the contradiction in our society, food prices are up while our stocks of food grains are enormous. We used to have, in those 4 years where it was 7.8%, we used to have 20 million tons of food grains a year on average. Now we have 54 million tons. We don't need that much. Why can that not be distributed to keep prices down and to get to the poorest of our society? Is that a governance issue that you've got 54? All experts, economists say we don't need more than 30 million. We need a certain amount because we have a volatile monsoon, but you don't need 54 million tons. What are we doing with 24 extra with food prices going up at 12%?
Well, that's a bit of an oddity, clearly. I don't know why we would need to have that extra buffer that we are currently building. But there is also a large amount of wastage in the chain of delivery between warehouses to the market.
And by the way, you're right, even that 54 million, about 5–6 million are eaten by rats.
So I don't know how much.
Better to give it to the poor than it's a question of distributing. Is that difficult?
And in good times, you can also export it. I mean, that's a very common way of dealing with surpluses. You know, you export in bad.
You export and you get a forward. You can buy it at any time back at a particular price. You know.
And then, of course, the cold chain on the vegetables and fruits, where there's a 33–34% wastage between the farm to the table. I think that particular issue has been getting attention of the previous government and hopefully this government. But it's again a long lead. Investments in cold chain are painfully slow to get rewarded.
But crucially important for the country. You're saving, as you say, 30% of your vegetables, which are so important for an average citizen. So give those incentives, get these going. So agriculture and agricultural prices.
Distribution is a big issue. You know, just to give you one number, the cost, if a consumer is paying 100 rupees, the farmer, Indian farmer, is getting 33 rupees. Global average is 66. 1/3 goes in distribution, collection of food grains, redistribution, cold storage, warehousing and redistribution. That's 1/3 cost. In India it is 2/3.
2/3, that's just unforgivable.
And it is that agriculture markets, APMC, it is inefficiency of Food Corporation of India. We don't have proper collections. You ask farmers, fruits and vegetables, half of them are getting destroyed because you're not allowed to sell. Now this government, they have done a few things in a very short period. For instance, what they have done is they have increased the essential commodities list. They have put onions and tomatoes into that because the prices were shooting up. Right. And they have asked the state governments to keep a very close eye on increase in prices. They're talking about a price stabilization fund. We've not seen the details, but they have mentioned that we want a price stabilization fund. Because unless that 12% inflation comes down, your interest rates will not come down. Right. And we need lower interest rates for industry to.
And your poverty, that food is the most important. Anil Agarwal, I mean, you see children in schools not getting enough food, the malnutrition, and you have 25 million tons too much food stocks. and prices going up at 12%. It just seems like something is desperately wrong in our agriculture distribution and stock policy.
No, one of the things which I have said, probably when you say three things to do, the second thing I always said is that why these companies which government run, one of the solution is, in the Western world you don't find whether the food corporation, why can't they corporatize it? Why professional management comes in? Right. 51%, 60% share goes to the public, and a very efficient. The food corporation can be 10 times bigger.
And 10 times more efficient.
10 times more efficient.
If it's independent and corporatized, as you say, and let the public of India own it. Yes.
Let the public of India, today you are saying how the 100 billion will be invested. Where can they invest? They can't invest in the stock market. We have a 250 best PSU in the country. You know, when ONGC can be another Exxon, you have all these companies, 250 companies. One way is go China way, that government has to decide whether they run it by the government. It's all right. But if you want to go Western world, as a democratic country, no democratic country by and large, whether you go to Brazil, whether you go to America, is run by 80% of the companies are corporation.
So you would say public sector should be owned by the average person in the country, not by, and what about private family-run companies? Make them also corporatize them, make the public widen the shareholder base?
I've seen by and large, the 20% company in America is owned by the family-owned. 80% are the corporation. Government is a governing body. They put the penalty, they want to make sure they do the right thing. Right. They put.
But here, what is the private, the family-owned, much higher percentage?
No, it should be about it. I have not seen, but 70% must be the public sector. 30%, 35% must be the private. When the company, like you have seen what Mr. Parekh has created, $60 billion company. It doesn't own by the private people.
I think actually I must say, for me, it's one of the greatest achievements. I don't know how you did it, to take a public sector company and make it into the hands of the people and make it highly efficient. What lessons can we learn for that for other public sector companies?
Well, we didn't take a public sector company. We started fresh. And government allowed us to start.
Yes, but still that area was for public sector generally. At that time, to even think of going private in that sector was anathema. And you did it. But you must have faced a lot of resistance. So say somebody wanted to go private or corporate.
I think it's not that, it's people, technology, talent. That is what you need.
We have that in
this country. We have enough of everything. You get the right people and give them empowerment, give them freedom, give them the capital, put governance norms, supervise the governance norms, because you're dealing in money, and create a reputation. Once you create a reputation,
then nobody can stop.
Then no one stops you.
So Sunil Mittal, the second recommendation you would give to the Prime Minister? What would that be?
I think accelerate decision making. I think that will be the second part now, after having created a good environment of investment. And one can see it in
accelerate decision making.
Accelerate decision making. We need faster decisions, because.
So you need to track that then. That somebody's applied. You need to know how fast it's gone, because it shouldn't be lost in the maze of don't know what happened.
Yeah, I mean, so take 4 pillars: hope, decision making, faster decision making, execution, and then deliverance. Right. Now, I think the first part is well done and needs to continue. Decision making now needs to come in. People should see the impact of this government through decision making. Faster decision making, files getting cleared, projects getting cleared, a lot of stuff is stuck in the pipeline, last mile connectivity is not happening. Let's unshackle that, and I think the government gets it.
Again, we need transparency in that, because only transparency will you see has a decision slowed down or not, and why?
I think there is still a little bit of fear in the system of taking decisions. I think the job of the government, the present day government, is to take away that fear, saying you will do it fearlessly, and as Mr. Parekh said,
this is for the country.
It's in a transparent way. Is for the country, there are no personal agendas, but go and take decisions, we are behind you.
Right. Your third recommendation, you're sitting in front of his second recommendation, you're sitting in front of the Prime Minister and he says, okay, you've given me one, e-auction everything, taken, done. Now, second?
Fiscal deficit. mend your fiscal deficit. The budget this year was 4.1%, and the present government also accepted those figures. In the first 3 months, we've already got 61% of the deficit. First 4 months.
61%
is already achieved.
So in the next 8 months, you've got only...
Yeah. So, you know, fiscal deficit is another reason that
Now you have, for the average viewer, your old customers, your current customers, why fiscal deficit? They say, I'm hungry. What are you talking about fiscal deficit?
I know, but you're borrowing more than what you are earning. You're spending more than what you're earning.
So that's their problem.
You cannot continue doing that. At some stage it will break. So in fiscal deficit, there must be disinvestments. Now, this year's budget for disinvestment was a little less than 60,000 crores.
No.
Only 6 months are left. That means every month we need 10,000 crores of government disinvestment to meet that budget. Otherwise, again, the fiscal deficit will go high. If fiscal deficit increases, that means, you know, it impacts your borrowing capacity, it impacts inflation, it impacts everything. It impacts
Prices would go up.
Prices would go up.
You know, while broadly agreeing with Deepak here, I have to sort of say that there are large sections of a society which are impatient. They are restless. For them, as you rightly pointed out, if you have to start managing our fiscal deficit today, which means contain investments, contain expenditure, whether it's welfare or otherwise, I think it's going to create some stress. The second part that Deepak is talking about is very relevant. Raise more resources. And if that means starting to pick up resources of tomorrow and start giving it today, more spectrum, more natural resources, higher disinvestment, you need to create a very large amount of resources, because delaying social projects or investments could create a different stress in the society.
Right.
So my own view is you have to spend more. You cannot spend less.
But raise
yes,
more.
But yes, you have
Raise
to watch
more.
the fiscal deficit.
But I have a question then for Anil Agarwal. You want to corporatize public sector units, make them 51, 55% owned by the general public. If somebody says to you, we will do that, and whatever we raise from it, we will earmark for housing for the poor, earmark for infrastructure, not just go into some big budget which go into salaries of people. That's the normal. All corporatization, disinvestment, privatization, call it what you like. Whatever money we raise goes for the poor of this country. Is that feasible?
Yeah, no, as I said, very simple. Government has to decide, even the public sector running as it is. It's great. The public sector CEOs are phenomenal. Give them a free hand.
But they'll
Build
never
a
give
company
it.
world class.
We've been waiting to give them freedom for...
Otherwise, sell the share 51% now.
Then the
in the
people
market,
will give
get
them
the
freedom.
huge resource. These company, each of the company will be 10 times bigger. And then sell another 26%. Government get a huge resource. Make sure, there is a caveat, nobody can acquire more than 10%.
No individual can acquire more than 10%?
Remain corporatized. The CEO will come, he is fully incentivized, he get his 1/4% stock option, he run the company for 5 years, make the company big, he create a great feasibility, go to the world market, raise the equity, raise the debt, make the company world class. Let it be like a world-class companies.
And he is answerable to the shareholders, the people, not to the government.
And the board. And he has to create the best board. He has to
not government.
Government is a government, only they look at the government.
The rules and regulations.
Absolutely.
So we did, one of the issues you're talking about, a fiscal deficit and prices. We did ask our economists what their forecasts are for prices next year. Let's see what they have to say. Inflation up or down?
For inflation, we will easily meet the RBI target for FY15 in that the inflation rate is likely to be 7% or lower. And for FY16, the inflation, the CPI inflation, is likely to be closer to 5%. So in that sense, if you will, that FY16 can be a bumper year for India.
The international price environment for food items is very favorable today. They are on the decline or very stable. And if government can bring down the tariff policies, tariffs on food items, they can easily get 7 to 8% CPI inflation. And if they keep the fiscal deficits tight, even next year, I would say they can come down to even 6% of CPI.
We still see inflation in the 7.5 to 8% range by March of next year, which is uncomfortably high. The RBI has been very clear. It's got a 6% inflation target for the following January 2016, and we suspect they're very serious about that target. So I think a year later we will be closer to that 6%, but it will involve difficult decisions on fiscal policy and on monetary policy.
As for inflation, the expectation this year is that it will remain high. CPI-based inflation average for the year is probably going to be around 8% or 8.5%. Next year it's likely to be slightly lower, but maybe 6.5 to 7%.
Inflation, in terms of the CPI, we are seeing it an average of around close to 7.5% in this particular financial year. And in case of the next financial year, we are seeing the number at around 7%.
So, Deepak Parekh, most people are saying a marginal increase in GDP growth and a slight decline in inflation. But there is this one worrying factor that everybody who went through 2008, 2009, a crash. And our RBI governor was one of the world experts to have forecast that crash. And people laughed at him when he did, and now they respect him because he saw it coming. And he alluded to it a bit in his review about 2 months ago. What's your take? Is it going to be a big crash coming? Should our viewers be careful about that, or is it boom, boom ahead?
Well, I don't see a crash coming.
You don't?
Tapering in US has happened. Significant amount of tapering.
Right.
And instead of money going out, money has come in. If you see from Jan to today, $31 billion has come in through FII route.
Right.
Both debt and equity.
Yes.
This is fresh net money.
Yes.
So, and everyone said, oh, when US does tapering, all the money will go out.
Back.
So it's not, we've got, because
and we should
the world is...
People are saying money will go back because their interest rates will go up and people will finally get a better return.
Yes, some money will go out. But I think even if you take our stock market, today it is trading at 16 times 1 year forward earnings. That is not too expensive, considering that we are on a trajectory of growth. Right. Higher growth, lower inflation. So good days, better days are going to come. So I don't see a huge withdrawal unless, of course, we do something stupid or something happens.
But
I don't see a crash coming.
What about a global crash?
You know, I would say generally there are a few flashpoints. Ukraine, Russia, that's one flashpoint. ISIS, Middle East, Ebola in the Western Africa front. So there are some trends which are bothersome.
But what about asset prices
but by and large,
too fast? What about economic factors? Those I agree are political.
No, but they do make an impact on the economy.
Yeah.
Euro, for example, has gone down by 7% within no time.
Yeah.
That was quite a surprise to see that euro dipping so fast, and it may just stay at that level. My own view is you are looking at a good situation for India in the coming year or two. I mean, there's no question of a crash. I mean, India is not going to see a crash. Indian economy is consuming, its consumption is going up. All we need is to flare it up with more investments.
And you don't think a global crash? Because that will impact India, of course.
On the margins, it always does. 2008 did bring its own stress to India.
Yes.
But Indian domestic economy is so large and so big that we are fairly insulated. If we can do our job well here within the country, I think we will be okay. And US has started to come back up. In fact, the US is showing very strong signs of an economic revival. I would be generally hopeful for the globe as well.
And we also asked the experts, where will the stock market be in the next year and 1 year later? Let's have a look at what they said.
From a year perspective, we are big believers in earnings momentum recovering in India. So we are looking at the current earnings estimates for next 2 years to be met, unlike last 3-4 years, with potential upside surprise also, depending on growth trajectory. And that should support markets moving up further from here. And when we're looking at 15–16% earnings growth for next 2 years, that's the kind of annualized returns you could look at for Nifty.
We are looking for the broad markets to deliver returns of about 8 to 10% through to the end of the fiscal year. Most key drivers are looking positive at this point in time. The policy environment has improved significantly after the decisive verdict in the national elections in the middle of the year. GDP growth seems to be accelerating, and the international liquidity environment remains benign. And if recent pronouncements by the ECB are anything to go by, it could actually get better. As far as the earnings outlook is concerned, we are looking for earnings for corporate India to grow at about 14% in the current fiscal year and by about 17 to 18% in the next fiscal year.
We continue to remain positive on the market. We believe that the government is putting in place the basic building blocks which will drive economic growth improvement and growth improvement for the corporate earnings. So consequently, our December 15 Sensex target will be 31,000. That's based on 14.5 times 1 year forward earnings. This is in line with the last 10-year averages.
We've been very positive on the market and we continue to be positive. We think over the next 4 years, earnings can double, and this is something we put out in a report very recently. And if earnings move the way we are expecting, then markets could more or less, mirror earnings growth. So it's quite good times, I think, for investors. They've not made money for the last 4–5 years. And I think the next 3–4 years will be quite good for investors.
So Anil Agarwal, in all your dealings internationally, is there nervousness that there could be a crash coming globally which could affect India, and people, our viewers should be a little careful, or there's no, I mean, unfortunately nobody forecast the last one, so we are not the greatest forecasters of crash. I think the Queen of England went to the London School of Economics and saw all the professors and looked at all and said, none of you saw this crash. You're professors of the greatest professors of London School of Economics. That was the only comment, and they all sort of said, yeah, man, we're right.
No, but I see definitely the commodity prices are softening.
Yes.
These commodity prices are softening, but India is another China. The excitement about India in the world is tremendous.
It is it?
It is tremendous. Everybody, after this government has come, is a wave which everybody is looking to be connected with India. The hope, as Sunil has said, the hope is there that another China is coming, and that will I think continue this.
But one of the issues which we all, I think we're all slightly to blame for, there's this saying that as Indians we may not be the most important people in the world, but we are certainly the most self-important people. So we think we can withstand a lot of our own things, withstand global trends, etc. But if you look at the history of the stock markets over the last 30–40 years, India and the emerging market stock prices have almost gone in tandem. They are just about following each other. So global factors do affect us dramatically, and we shouldn't overemphasize our own importance in that. So in that context, if we look at a slight global slowdown, if we look at all the figures on the global slowdown in GDP in emerging markets. Now, is this a worry for India or not? If you look at the graph which shows historically for 20 years emerging markets, we're talking about 150 emerging markets, grew at an average of 3.6 on the left of the graph. Then in the 10 years, the decade of the 2000–2010, emerging markets, everybody went up to 7.3, so did India. Now emerging markets over the next 5 years are forecast to revert to norm. How does India counter that and stay at 8–9% and not go back to 4%? Deepak, how do you fight global trends?
Well, we have such a large domestic economy.
That's a huge
plus.
China does defy it to a large extent.
And it's a consuming society.
Right.
If you take in being a finance person, let me tell you, consumer credit penetration in India is in single digits. In our neighboring countries, it is in 30s and 40s. In developed countries, it is even more. Housing as a percentage of GDP, we are the lowest. It's 9%. Even Thailand is more.
You should have learned from them how many, you got 800 million phones or 600 million phones. The penetration of telecom
is here.
But that is
financial
shocking,
products, insurance, you know, it is so low that there's a huge capacity to grow, ability to grow in financial. And now the other thing is, Sunil will be glad to know, with the development of telecom and banking, with a combination of telecom and banking,
it's fabulous.
It's a game changer. In the next 10 years, it's really a game changer. That credit penetration can go up, housing can go up, but again, in housing, we need ease of doing business.
Right.
You can't expect 60 approvals to set up your own house. And why multiplicity of approvals? And why corruption at every level?
Exactly. Corruption to boot on top of that.
And it takes 2 to 3 years to get plans approved. For what?
Try to open a restaurant, 30 people have to be bribed.
Right.
Any area, this has
we
to
have
stop.
to take cognizance of this corruption.
Right.
Because it increases the end product's price.
So when we are looking at above the ground, you're above the ground, you're below the ground.
I'm up in the air.
You're up in the air. In the cloud, yeah. The best place to be, actually. How do we make sure that the momentum, for example, in telecom, in internet, in that whole area, because that is where we are outstanding. Our whole software is way above China's. One sector we're way better than China or any developing country.
You know, I think you touched upon actually a very important point and very dear to me. We do despair that, take the case of telecom equipment, we import tens of billions, overall electronics hundreds of billions. The good news is large part of these end products or devices have now software in them. And a lot of that flows back from India. So every product that we see, which is finished hardware, has a lot of Indian component in it now, which is good news. Yeah. Now we also need to do the hardware part as well, very well. Take the case of telecom. To my mind, it will take us decades to build great roads and highways and dams and ports and airports. It will take time. We have to do it. Right. What can actually jumpstart, and has done it in the last 2 or 3 decades, is telecommunications. A digital India can add a delta to the economy that we have never seen before.
We have seen 2% increase. I think it could go to 4-5%.
So everybody now has a phone in their hands. Can we make them broadband now? Can we ensure that they have digital delivery on those phones? And that's a job which is the next generation job that we have to do.
Which is what you're looking at.
We're starting to do now. I mean, already.
But I do want to ask you the concomitant side of that, there's this question of e-waste. You're talking about dams, there's the environment. How do we continue the growth, but look after the environment? How do you do that?
Well, I think both have to go side by side. We have to have definitely better concentration on managing. E-waste is going to become a huge problem. I mean, we have to...
EVS?
E-waste.
E-waste, sorry.
E-waste is going to become a huge problem, so we have to deal with that. But I think environmental issues and all will need to be looked at. I'm not saying India should be irresponsible, but I don't want to get blocked by the NGOs who in the name of environment are going to stop the growth of this country. The developed world have had their chance, they have industrialized in a massive way, and now we are being preached almost on every international forum about
the same people who have...
Yeah, they have exploited it, they've used it, they've lifted their economies. Nobody's in poverty in developed nations, or very few of them are. I think India should not fall in the trap of stopping its industrial growth on the altar of the pressure of the NGO and activists. But yes, it needs to be responsible. Take the case of telecommunications. There are about 400,000 towers. Most of them are consuming diesel. Year by year, greening of towers is happening. Solar is coming through. Alternate energy is coming through. There's a lot of work going on. We have to show responsibility. But at the same time, in the short term, there will be more consumption of energy and therefore more pollution.
Anil Agarwal, that's above the ground. Below the ground also, there's the environmental issues. How do you tackle that?
It's very important. Today's technology is the best. You know, if you look at all the natural resources, anything has been there for last 50 years, 70 years. We are building our new. And we have a today's technology, which is a world class.
Which is much more environment friendly than the older technologies.
We cannot do anything if it is not sustainable. We have to be very, very within the box, within the environmental norms. We have, which we can deliver, whether it's oil and gas, whether it's a gold, whether it's a copper, whether it's iron ore. Anything we can deliver, and this can be processed, can be manufactured in a most sustainable manner.
Sustainable and not be extreme in terms of sacrifice all our growth for environment. So Deepak Parekh, again coming back to transparency.
You need a balance.
If you had clear rules, that these are the rules which you have to go under the ground or over the ground with, people would work under that. But even in India, there are no real clear rules. You never know, and then somebody comes up. So can that solve the problem? Have very clear rules on what you have to do for the environment. Transparency.
No, we need discipline. And we need mechanisms in our economy which punish the people who are not disciplined. There are factories and factories who are spewing
the Ganga
outside their factory, but they are not caught, they are not punished, they are not penalized. So the strict mechanism to conduct that the people are living within the rules.
India is a punishment-free society. You can drive on the right-hand side of the road all
and
the
nothing
way.
will happen.
Nothing will happen to you until we have punishments, because we are such law-abiding people outside India, because there's penalties.
But I tell you, by and large, the large corporations today have no choice but to be very responsible towards the environment.
Right.
They get punished. They get picked up very quickly, either on the social media or by the activists. And what Deepak is referring to is there are a lot of small industries which are not applying enough technology. They are not being watched carefully. So when you're inviting large corporations, be a little more liberal in your approval process, because they are going to be responsible.
Yeah.
Self-declaration.
For their own.
Self-declaration.
Yes. Self-declaration and proper checks.
Is the answer. Self-declaration.
Investors boycott them, customers boycott them. They cannot afford not to be reasonable.
So now the final round, the third question, the Prime Minister asks you, what's the third recommendation you have?
No, judiciary reform.
Judiciary reform.
Very important. Police reform. Income tax reform. The tax authority, very simple. We waste so much of our time and the money in this. This can cut down, 75% can be cut down. And that can put into the productivity.
You know, I exactly ties up with India punishment free. You know, if you take media, no defamation. There are laws, it takes 20, 25 years, unless we have strong defamation laws, we will not discipline ourselves. And that's everywhere. So unless the judiciary, I think, is key, and the police, there must be punishment. And fair punishment, and not the government punishing, but these independent bodies like the judiciary punishing people for defamation, for example.
Modernize them, professionalize them, bring the technology within them. Let's be very positive. Yeah. Let's be very positive. Right. And this thing comes up, 75% unnecessarily waste everything, but don't waste time. It's a high time.
Quite right.
To eradicate our poverty and create our job.
Your third recommendations?
I think we have to raise the bar on accountability. My own view is, we have a very hard-working Prime Minister. There will be decision-making. And if the decisions are not implemented, if the execution is not up to the mark, I think we need to raise the bar on accountability. People must be held accountable who are not performing. Right. Today, the problem is if you don't do your duty, it's fine with you, because you will be into your next job within the government, in the governance system somewhere. And the fear of not taking a decision will always keep you probably more on the side of not doing much. I think if we don't implement our decisions, if we do not get the execution right, I think India will never be able to utilize its full strength that it has, full potential it has. So accountability of non-performance is very important.
And you're saying accountability, not only government, say the public sector. I mean, look at Air India. And you were talking about, look at BSNL. There's no accountability.
And consequence management, therefore, must follow.
Consequence management.
Yeah, I would say public sector. Handle your public sector. And you know, there are a number of issues in this, like Air India. Will we every year keep on giving thousands and thousands of crores with no solution in mind?
With no solution?
No solution. Yeah. No strategy. The other point is filling up jobs in a quicker manner. There are 10 CEOs missing in PSUs today, including Coal India. Coal India has no CEO.
PSU without
one
CEO.
Then there are lots of others. The freight corridor has no CEO. The CACP has no CEO for more than 4 months. That's the agriculture price cost. They decide what is the minimum price of agriculture.
You don't have a CEO.
We don't have a CEO. Judges, I am told that 4,700 judges, judicial positions in high courts and district courts across the country are vacant. If these positions are filled up, then decisions, the legal cases will be settled faster. There will be some movement, because, delayed justice is no justice. But let's manage public sector properly. Absolutely. And again, Sunil's point on accountability is very important in that.
I think, well, that's all we have time for. I have learnt a lot. Thank you very much indeed. I've got 9 points. We shall put them all on our website, and we shall ask viewers to interact and give your own suggestions on what 3 things the Prime Minister and this government should do immediately. I hope you've learnt as much as I have today. Thanks very much for being here.